Hello and welcome everyone. This is another episode of the Market Snapshot series. My name is Rufas Kamau, Market Analyst at FX Pesa. So apologies, I know my voice is not very good today because I have a flu, but hopefully you will get to hear me just as fine. So happy Valentine's everyone. I hope you have a lovely and lively day. I hope you get some time besides your work to enjoy some time with your loved ones. And with that in mind, let's get started. So today is the big day that we have all been waiting for. This is the day when the US announces its inflation data, or what we basically describe as the CPI. So I'll be starting right away with describing what the CPI is and what the trend has been. So CPI is short for Consumer Price Index. So it's basically an index that constitutes a basket of commodities that are consumed by the average US household. So this basket will add several things that the US consumer normally purchases every month. So one of the key items in the basket is food prices. So it will consider the average level of retail prices that are served to US consumers every month. It also look at beverages, at unit clothing, healthcare, also at housing, transport, and many other items that the average consumer purchases every month. So when you track the prices of these products, then you compare these prices for different time, then you are able to estimate the average change price every month, every quarter, and every year, and you can tell how much inflation is in the economy. So from what we are seeing here, you can see there is three sets of data. There is a CPI month over month. So you're comparing this basket of commodities from one month to the other. Then there is year over year. You're comparing the same date last year. And then there's what you call core CPI month over month. So generally, food and energy prices are considered to be very volatile. So sometimes it makes sense to look at the CPI, same basket, without food and energy prices. So you look at much more stable prices, such as healthcare, housing, and so on. So with that in mind, I would like to focus on what has been happening for the last months. So if you look at CPI month, you would notice that from around 2015, a majority of the prints have been to the upper side, with the highest rises happening. So during this period, we have seen these spikes happening every month. The average cost of this basket of commodities moving higher month to month, which accumulates to much higher inflation. So a better number to focus on is the yearly, because this is tabled every month, and you can see the cumulative inflation year over year. So clearly, during May and June 2020, inflation was extremely low. So if you remove the forecast, you can see it was around 0.2%. But as the US kept on printing more money during the COVID period, this increased the monetary base, meaning that there was too much money chasing fewer goods, and this led to much high inflation. So the prices of these goods go up because there was just so much excess money flowing in the US economy. So this kept on rising and rising until it became such a huge problem that at some point it became the #1 priority for the Federal Reserve Bank of the US to address. So since this particular month, that is July, we have seen inflation start to narrow down, go back down, and kept going down up until last. So somewhere around March, and this is March last year, the Fed started hiking interest rates, and this was to reduce the excess money that was flowing within the US economy. And this act of basically tightening the Fed balance led to more pressure for inflation to reduce, and currently it has dropped from a peak of 9.1% to 6.5% in the last reading. So a lot of investors have been following this data, mainly because it has been the guiding factor for the Fed whenever it meets and decides to either hike interest rates or keep them level. So in the last Fed meeting, they mentioned that they were hiking interest rates by 25 basis points, which eventually pushed US interest rates to 4.75%. And we're expecting that they will be going for another 25 basis points. However, all the decisions that the Fed is making are always based on the data present in the economy. So one of the data points is coming out today, and it's this inflation rate. So previously at 6.5%, now we expect this data to be 6.2%. So if inflation goes according to plan and gets slower and slower to 6.2%, then the Fed go for 25 basis point hike as expected. And this is information that has already been priced in the market. However, if at all we have a different number and inflation happens to spike, like it happened with Germany and Switzerland earlier this week and last week, then there's a good chance that we'll be seeing a lot of volatility in the market. So for instance, a reading of 6.5% or even higher would mean that there's more pressure on the Fed to get more aggressive rate hikes in order to address the inflation and stop the inflation from getting sticky within the US economy. So a big spike in inflation in January to 6.5% or even higher would mean that the market has to react. And in this case, the market would be betting for a stronger rate hike, and this strengthen the dollar, whereas it weaken equities. So on the other hand, if the data was to come in slower than expected, that is less than 6.2%, which is what we are expecting. So if you get 6.1, 6.0, or even 5, then in that case, inflation would be moving in the right direction and it will create the necessary conditions for equities to rally. So we will be seeing the S&P 500, the Dow Jones, the Nasdaq, the Russell 2000, even Bitcoin towards the upper side as a result of renewed confidence in the market. And at the same time, we would be seeing a much bigger dollar. So that's the key highlight for the markets today. A simple way of explaining this is basically saying, if you have someone who is holding tight to your neck, trying to strangle you, you're not focused about the money in your pocket, the mobile phone, or even some people that you have been having for the week. So you're mostly focused on the immediate problem. In that case, is stopping yourself getting strangled. So the same case happens whenever there is a big announcement in markets, such as the CPI data later today. So this will be happening at 4:30 p.m. And the natural expectation is that investors don't care about any other news in the markets. They are majorly focused on the US CPI data. So yes, there is a lot of stuff happening in the economic calendar today. Early in the morning, we had inflation expectations. New Zealand at 0%. We had UK Cayman pound change, read lower, negative 4.9K, basically implying that the UK economy is currently very strong and there's less people claiming for unemployment insurance. So unemployment remains the same at 3.7%. So yes, this is news and you might see some short-term reaction. But bottom line is that everyone is focused on the CPI number for that period. So on the stock side, we saw a very good news yesterday. So we have been following the AI wars. One of the companies that are leading this space in terms of processing of big data is Palantir Technologies Incorporated. So this company has been in existence for quite a period of time. It hit some highlights some time back, I think 2 years ago, when Warren Buffett decided to invest in the company. So it has been very early for the company and it has been making a lot of losses. So you can see the last consecutive quarters, the company was making good revenue, but losses on the lower side. So the yellow bar represents the net income, which is a loss below zero, and this is the revenues which have been quite steady. So if you look at the annual performance, so for the last 4 years, the company was basically listed, I think 2-3 years ago during COVID. So you can see that the revenues have been rising year over year, but then the losses have been highest in 2020, lower in 2021. We have not seen a big number for 2022 yet, but then the earnings were reported last night. So immediately after the earnings reported a profit, the company jumped 16.82% after markets trading. So as the market looks open today, we're expecting a very strong spike to be happening here. So just to give you a focus. So this is Palantir shares. They've not been doing very well for the last 1 week. So a very big drop had happened for this period here. And now we're expecting a 16% spike. So the market will open with a big gap towards the upper side, and perhaps there'll be continued movement. So looking at the earnings closely, there's quite a number of things to observe. So just a moment. So it reported fourth quarter earnings of $0.04 per share and a revenue of $508.6 billion. So the consensus estimate was 0.03. So you can see it was a big surprise. The company reporting 0.04 compared to 0.03. And at the same time, the revenue was also a bit. It was 508.6 billion compared to an expectation of 506.0 million. So revenue grew 17.5% on an year-over-year basis. So the company said it expects first quarter revenue to be 503 million, 507 is a range, and a revenue of 2.1 billion, 18 billion for the year. And this is a range to 2.3. So the current consensus revenue estimate is 502, which is way higher than what the company is projecting. So it basically means that the revenue was revised downwards. And at the same time, the full year revenue of 2.29 billion is still way high at the expectation here from the company, meaning that the outlook was revised downwards. So we don't know how the market is going to react to this, but from last night's reaction, we're expecting some big jump at the market open. So whenever the New York Stock Exchange opens, we're expecting a big jump in this. So that being mentioned, I will be expecting the markets to remain sideways. Nothing much is expected to be happening up until get further TPM when we have the big news. So US Tech 100 managed to make a very strong comeback yesterday. So we could see the market trading sideways up until the news. Pound USD made a very strong comeback, and if for the price action, since this morning, it's not that trending. Since, as I already mentioned, we'll be expecting some results in the news. So US 500, a very strong comeback yesterday. So now we are trading around an area where there's a very strong trend line. So move all this noise, zoom out my chart, then you can see the trend line clearly here. So the market is expected to remain close to this trend line until we get a break. So as for gold, same case, managed to resume this particular pattern. It's playing along this trend line now. After testing this particular trend line, we expect it to remain within the same area until we get to the news. So Euro USD, another strong comeback yesterday, as well as UK oil made some good recovery yesterday. So a lot of stuff has been happening in the markets. So if you look at UK oil, I would say this is majorly sideways. So from this area here, you can see there's a lot of sideways momentum. So this would remain up until 4:30, and then from that area, we'll be expecting to see a lot of momentum in one direction, depending on the outcome of the CPI data. So that's the key focus for today. Thank you very much, everyone. So if there's any question, I'm checking on that right away. So these CPI numbers are revisable. Keep hearing GDP numbers are usually revised of numbers. So when you think of GDP, you're looking at the gross domestic product. So you have to track all the economic production within an economy, and that's a big data. So of course, some data will eventually be there, and there will be need for revisions. So as for CPI, most of the time, even if there's a revision, it's usually very small, and the market has already reacted to the information. So yes, eventually there is going to be some form of revision, but most of the time the revision is very close to the actual number. So a lot of investors don't focus on the revised data; they focus on the actual announcements to see the month per month. So PCE index is basically similar to CPI index, except that it doesn't measure from the consumer side, measures from the producer side. So it's a very close measure to CPI. However, when central banks are making decisions, they focus on the CPI. However, if you look at the PCE, then it can be an easy way to predict the CPI. So thank you for your questions. One last minute, CHF. So let's look at that before we end the session. So it seems like a market that was on a very strong recovery from mid last month to this month. So it doesn't seem at all interesting from a daily chart perspective. I would say that's a pretty good ceiling for this market. So if I zoom out, it seems like a market that was on a very strong bullish trend line before I started printing lower lows and lower highs. So if you go to a smaller time frame, such as the 4-hour chart, and zoom out, then you can see the swings and the way they have been following each other. So swings up, down, towards the lower trend line, then back up a period, I would say, yeah, that the market was just moving sideways before breaking towards the upper side, retesting and higher. So key price levels, this one, most probably be along this area here. I would also be more interested in the sequence around this area that was hit several times, and also yesterday's low. Sorry, last week's low is a very interesting price level. Now, if you have a smaller time frame, then it makes a lot of sense to be observing these key price levels. So last week, I would say this was a noisy area, but the market was just moving sideways, break towards the lower side, and then up. Then yesterday, very strong rally, and today sideways. So if I was an intraday trader, I would be looking at a potential movement here, with this being a potential flagpole. Then from a smaller time frame, then I would consider this as my flag, and then check on a potential break. So this would be my focus here, where I have a flagpole and a flag on the 50 minutes chart, and then potentially a break, especially between games. So thank you very much, guys. Thank you for your time, and I hope to see you for the next session. So is it advisable then during the news? If you don't know what you're doing, it's advisable to stay off. But if you understand the volatility that happens during news announcements, and you know a way to take advantage of that, then by all means, you can take advantage of that. So thank you, guys. See you on the next session.